right, so we're going to be doing a comparison, basically, which is the better to buy, between West Pharmaceuticals, UnitedHealth, UNH, and then take a look at Mckesson, MCK. Starting off with West and looking at the chart, because I think that's the primary reason why we're down at 268 in conjunction with the market sell-off. But there's a lot of technical reasons why we've gone from mid 400s down to mid 200s on the share price, and we could see that this sucker was overcooked big time. When you have the daily chart or the daily share price, we're outside the daily Keltner channel, and that whole entire Keltner channel is outside the monthly Keltner channel. And then you get a double top, and then you're getting a weakening on the monthly RSI, and the daily rises above. That's what happens. So we have a higher lows, or lower highs, sorry, declining monthly, all right, and then you get a massive whoosh event, and that happens 3-4 times. We even got it again recently on this one. You can't tell because I have too much. I'll clean some of these up right now. But point being is that this is just a really solid technical sell-off. It's well overdue. And I was feeling, decent right here. Like, it might be a good time to add to it. But, I mean, once we broke down through here, we came down. We retested that uptrend rate, and that's what we got now. However, we're coming into a little more of like, the buy one area or discretionary buys. This is when, you're going to be looking to make sizable additions to the position. But we have yet to see anything that allows us to do that, meaning I'm not seeing the monthly, any sort of uptick in the monthly. I'd like to see it get out below the monthly Keltner channel before I even consider that. However, we can see that we're getting a little bit of buying activity. Well, it's selling activity right now, but for the most part, look at this move versus yesterday's move. So that's Thursday. This is Friday's move. A little bit more volume on the day prior, but that didn't move too much under some decent volume. So that's telling us there's a little bit of a battle. Maybe there's some people starting to step in here, which we had 262 as the discretionary buy. That's where I think we're getting a discounted value, and I think that's fair to say. Let's take a look at some of the valuations. Here's the discounted cash flow, DCF, the 5-year growth exit. We got about 41% there. 10 years, probably 72. That's pretty good. So if you want to hold on to this for a while, the same for the EBITDA. If that's similar, it's probably going to be similar. Yeah, so about 40% on the 5 years and 10% or 70-something% on the 10 years, depending on which one you're going to follow there. Terminal values. Let's just make sure I got these in the right. I don't want to be telling you. Yeah, okay, that's fine. Trading values. Here's the multiples for PE, just a little bit to the upside, and the EBITDA to the upside. That's fair because we're going to get earnings power value is probably not good. Yeah. So we're paying a little bit for their earnings, and that's fine. But the discount dividend model is going to show us that we got significant upside on the stable growth. This is probably the one we're going to follow, multi-stage. So we're getting to the point where the DCF is probably going to give us some support, and then we should start getting solid support now that some of these dividend discount models are starting to show that we're a little bit discounted. But that doesn't mean we can't go further. I mean, this sucker, in some cases, is still very overvalued. Question is, where are we going to stop? I don't know, but it's a solid dividend. Let me just, nothing crazy. Let's take a look at that before I start really getting down the rabbit hole here. Yeah. It's safe. The yield's terrible, but that being said, they grow. It's inconsistent. Yeah, these are all the things you want to see. Yield is atrocious. It's, everybody's going to say, well, it's not really much that like to bring home. Okay. But the more I hold on to it, the cheaper my investment comes. West Pharmaceuticals is not going to be going out of business anytime soon. It's just a terrible technical price right now, and they benefited they're having a horrendous COVID fade. Let's take a look at West. Oh my gosh, I hate them. I'm not coming in to buy anything. Come on, relax. But that's the thing. These guys, all the plastic. I shouldn't say all. A lot of the plastic stuff you're going to see in a doctor's office and disposable things. These guys most likely have a hand in here. Syringes, vials. These guys crank it out. COVID, obviously going to need them. No COVID, still going to need them. So, see if there's anything we could take a look at here. Let's actually take a look at that real quick, because let's see how much cash these guys have. I mean, yeah, this shows you right there. This probably sums it up perfectly. Net sales. By the way, this is I think not my next one, but the second article I'm going to write. I'll try banging out this weekend. I'm feeling pretty aggressive with writing, so maybe I'll get it done. But if COVID is dying, and the demand is plummeting, still growing sales. Still earnings year over year. Look at that. Boom, boom. Second quarter, so you got decent amount of COVID in here. I mean, we probably should see a decent drop off. But I mean, these guys are delivering for the next quarter. So I mean, the second quarter should be. I would have thought the second quarter numbers would be a solid drop. Okay, organic. So this is important. Yeah, these guys know what they're doing. They have what everybody wants for what they do. Interesting. Slightly declined. So sales from COVID slightly declined, but yet net sales were up. Okay, so these guys, you have to remember, these guys were executing before COVID. They saw a nice solid spike in demand for what they do, because obviously what they're going to need for COVID. But that doesn't mean, first of all, COVID's not going away entirely. So we have to accept that. So there's always going to be a demand for it, and there's probably going to be a seasonal demand for, everybody basically starting to get their COVID shots, which is essentially, going to be, at the same level as our flu shots. So there you go. So every year there's probably there's probably be stable demand and then some seasonal demand too. So slight decline. I mean, it's not nothing, but going from mid 2.9 to low 3.0s, 3.0. I mean, it's not terrible considering that the demand for COVID vaccines and everything is fading hard. So they're losing 20. You're losing 20%, right? But then look, you're not getting a 20% cut in sales. base business sales. So the actual company, what they do, this is what we do, this is what we have been doing, is growing. And it's almost completely offsetting the loss in COVID. So we're seeing a cut in EPS. That's okay. It's not okay, but it's not terrible. Overall, these guys, I have like no fear on buying up WST. And we're getting to that point where, I mean, maybe it's coming down 2%. Maybe tomorrow or Monday is probably when I might want to pull the trigger on that. Okay, that's WST. Before we go, let's go to valuation. Still overvalued. Profitability is crazy though. So that's that when you see these things, which I'm gonna say like the growth isn't great because the year over year overvalued, right? Because of most of the earnings, multiples and all that. But guys are extremely profitable. So. Yeah. So, and this makes sense. This is, and that's the thing, like another 20% down is where I'm like, you just start throwing money at it. Now, let's go back to the chart right before we move on to, let's say, Mckesson. Just take a look at the monthly, see what we've got here. So, still green. This thing hasn't been purple basically since what? 2011? You're telling me people don't want in on this? Crazy. Crazy. That being said, once we get below 250 something, look at that. That's possible. And that's where this is probably the next line where I'm looking to, probably get down close to 200. So after this, you can start taking, there's a point in here where you might see a nice little bounce and you can take a, maybe this is what we're looking for the reversal. But that's a sharp angle. We haven't based out at all. We haven't done this basically at all. So we need to see some sort of, accumulation, distribution, hopefully in this case accumulation, at some point, maybe in these 250 area. We get a nice little snapback and it does this for a bit, and then we can grind up and out. But if it cuts through, I mean, this is over a few months. Look at the volume in here. You got nothing. It's no problem this thing can go down to 150. And if it does, fine. I'll take it. Because probably once it gets to here, it's probably good. If it's going to move up and there's nothing in here, sometimes even though it goes right back down through it, can go right back up through it too. Such low volumes. I mean, you can see that here, it's slowing down a little bit. If you look at the daily chart, there's at least a little bit of chop going on here in the last few months, right? So, anyway, that's WST. Again, I think we are probably still valued up here for what we'll grow into. This is probably a discount for that, but the real value is probably down 200s. And if you needed to buy it and value it for today, it's probably around 200 to 150. I know that's a huge gap there, but it depends on where people want to start looking, what they find valuable for WST. Me, it's cash production, and that basement foundation of a dividend that's not going to go away, and it should grow a little bit, right? So anyway, moving on to the next, Mckesson. I see an awesome chart. Oh my gosh. Now Mckesson, Cardinal, these guys, and also in conjunction with health insurance companies, payers, whatever, managed care. These guys are, these middlemen that just distribute. Oh, I mean, they're diversifying in many ways now. They're much more, versus like 10 years ago. These guys have acquired, them and Cardinal have acquired a lot of small companies to be a little bit more of an embedded service that, because there was we've been talking about kind of getting rid of some of these guys as, ripping people off because they really don't, they're not really producers of drugs, and they're not the payers. They're just kind of in between, one of the in between guys, which is important. But at the same time, these are the guys that are making a lot of cash for really not doing so much. But anyway, Mckesson, what do we got? That's the monthly. That's probably where I'll keep it anyway. It's just unstoppable here. Let's see what Mckesson has here. And then, do United. Mckesson. All right. Let's take a look at their valuations, and let me get my. I gotta get this service and all this stuff all loaded up into our healthcare, compounding healthcare. Hello. That's probably a good one to start off with, but gotta go back to DCF, which is gonna be crazy. That's not bad at all. Let's go back to DCF and check the. Let's go to the growth exit. Not bad. Not bad at all. Yeah. So, I don't think I have to go too much further into that. And we're literally, I mean, that's what I just said. These guys are they're just too big of a cogwheel. I mean, you pull these guys out, or they start getting stripped down and regulated, you got a serious problem with. I mean, these guys have done enough growing and just spreading around to everything, just getting involved in all this, that they can't. Essentially, whatever, one of these industries takes off in some way, these guys got to go with it. Or if the whole industry or sector grows, these guys will grow with it. Let's go to dividends, just to show you how amazing it is. Yields, again, junk, but it ain't going anywhere. Yields junk, growth is meh, consistency's good, safety solid. Obviously, if you have one of these two is usually going to be, it's going to be inverted there in some way. They have us overvalued, which, yes, but these guys are extremely profitable, so they'll grow into the valuation. Growth is small, but, you're talking, like, these guys they're not going to have, they need everybody else to grow for them to grow, so it's kind of outside their, I guess they could diversify and do better and out-compete, but for the most part, if they're going to grow, it's because who they're helping out and supplying and working with needs to grow too. So I don't really bash them for that. Profitability, there you go. Revisions, yeah. These guys are great. Question is now, oh yeah, let's go quickly go to 302. I mean, I might have to adjust that. I've been hesitant to adjust some of these guys, but let's see where I have 302 is where, can we get there? Yeah, we can get there. We should probably get there too. So I'm not going to adjust that. That might seem like we're not going to get there, but we're cooking so hard that we got to be patient. You can nibble on these things because you want to get in on the name, and it's at this point I don't see why it can't go any higher. It's just pure momentum at this point, and these guys are profitable, and they're going to be profitable regardless of what the economic situation is. So this could be where some people are hanging out. It's got dividend. Obviously, it's not an amazing dividend, but regardless, it cheapens the initial investment over time. Anyway, that being said, so where would I look? Yeah, 302, and then maybe in these 250 area, come back down to here is where you might want to start sizing up a little bit. Let's move on to UNH now. Why can't I do this? It's going to have a very similar chart. Well, maybe not in terms of the pattern, but the fact is this is unstoppable. Just seeing. Yeah, it's probably best fit, that wick above. Where'd you show? Yeah, there's the top of it. So we're starting to weaken up a little bit. Unless we really pop out. Let's take a look at the daily here. It's great, but you know what? This is where you need to be a little bit like, this is scary, right? Because 2020, I mean, these guys made bank during COVID because no one was going to their doctor. No one was getting all these high-priced things. People were dying of COVID, which, this is going to sound terrible, is a very cheap situation. Sounds terrible, but, you know, you had a lot of people who were elderly that would have been in hospitals and in care for months and years of expensive treatments, and all those really old, sick people that died from COVID. I mean, a few days in the hospital for them to... This is sounding terrible, but this is what these guys are looking at. A few days in the hospital in intensive care. Yeah, expensive. But, you know, that was going to happen basically at the end of their life anyway. Or they were going to, you know, die of heart disease, cancer, diabetes, something that was going to grind away on these people's bodies. That was going to cost a lot, you know, money for treatments and pharmaceutical hospital visits, doctor's visits, specialists, you know, care. All that was going to cost these guys lots of money, and they're gone, and no one was going to see their primary, which was, you know, a constant drain. These guys made so much money, and it ain't, you know, so they lost the expensive people, the people that, you know, and, you know, people weren't utilizing it. They weren't just asking for money. Anyway, now here's a question. Do we get the soliloquy? Do we get this aftermath, which in COVID, which is all these secondary infections a couple years later, after having a bad bout with a virus, is when your body tends to have some issues. It just seems that's the way it is. I guess the Spanish flu, some of the worst people just dropping dead from various illnesses and people getting staph infections and various parts of their body internally, things like that. Fungal infections because their body's biome is just not right. Invasive candidiasis, whatever it's called. Anyway, I'll stop. But point being is that there's going to probably be a spike in doctors and usage, so we got to keep an eye on this guy. Plus, the chart's just crazy. I'll end it there for UNH. I don't really think I need to go further into it, except we can take a look at UNH's probably outstanding valuation models. What? Oh, yeah, that's right. Yeah, I gotta build this one in. Sorry, guys. I just realized I don't have one for this. I gotta build it in. But yeah, it's not bad. I expected this one to be. This is where I'm a little head scratching here. Yeah. Now let's take a look at it. Got our setups here for. It's not bad. It's not bad. I mean, valuation's probably going to be overcooked. Pretty bad, yeah. You got some good these are good. Their comparison to sector median's a little skewed because it's, they don't really do a great job of doing it for the industry versus the sector. UnitedHealthcare as an industry the multiples aren't going to be like 4 or 5s. You might get some that are at that are growing, but not the big boys. Yeah, I mean, it's not bad. It's not great. But the ones that you want to be looking at, valuations for I mean, it's not going to look good because what these guys own. They just own money, essentially, right? So these guys are just a broker of healthcare. So as long as the dividend stays strong, these guys, keep pulling in cash. I mean, this is fine. It's not great. Yeah, they're giving it a D-, but, at this point, if you look at some of these, it's not terrible at all. Undervalued in some ways. It's fine. Considering, I mean, now here's the thing. It's fine. We're fine here, which tells us, hey, we can go higher. So maybe if you're looking to get in on this sucker, you have to get in. Or you want to put some money someplace and you don't really like any of the other options, yeah. I mean, the big scary thing's gonna probably be next year or so if the Democrats do terrible in the midterms. They're probably gonna go for some sort of home run situation next year. So I don't know what that means. They went after drug companies with Medicare, Medicaid, Medicare, with the government being able to finally negotiate with some drugs. Nothing. I mean, things that they needed, that I believe should be, not jacked up through the roof and just unregulated prices, but it's not every single drug or therapy or pharmaceutical for them. I think most of them. I don't think there were too many biologics in there. But that's great. That's like a win on paper. But if they need to convince the general population that they're trying to do something about healthcare, which in general they really haven't, nothing that's going to move the needle. They need to move needle to the far end, and the only way you do that is you start taking, I shouldn't say regulating, but really wondering how we're going to extract healthcare company or health insurance companies, managed care out of the system. How do we get these guys who take more money and then deny giving money back? And it's hostage. It's your healthcare as a hostage. The idea is that healthier people don't, they pay in, they don't use as much. Well, that's not okay. I mean, personally, I avoid going to the doctors because I don't feel like paying more or being a sap to the system. But I feel like, there's going to be a massive push for both mental health. Integrated health is probably more like it. And preventative care. It's, we wouldn't, and they should push it too. These health insurance companies should too, because if we could stop people from getting very sick, then they won't have to be paying terrible chronic diseases for 20, 30 years until the person dies. But anyway, I'll stop with that rant. If I was to rank them, I would still put WST number one. There's some regulatory risk in the other two. WST I don't think is good. They have competitors, but I don't think they're going to be. Like, they still have room to grow. And not that UNH and Mckesson, they definitely do. Like, they can just buy out. These guys can buy smaller health insurance companies whenever they need growth. Mckesson can just pick something else to buy and grow. WST probably has the most potential to dive into something new, and that growth, that whatever they're buying or expanding into, could move the needle a little bit more for them in terms of their growth. If everything stays the same, though, in healthcare for the next 30 years, probably UNH. It's probably the backwards. It's probably UNH, Mckesson, and then WST. On a technical basis, I would be looking for... I wouldn't be buying heavily into Mckesson or UNH, especially UNH. This one looks like it needs a little bit of a pullback here. We're looking at the monthly. We're going higher. I mean, this is the first big push, and we're starting to fade even here. So I think we're due for a pullback on UNH. Whereas if we go back to Mckesson, I think she's got more room to go. But I'd still wait for about 250 right now. Whereas WST, I am licking my chops to buy. Because this is either a pullback to another big move and we kind of just scoop it up and go on out, or we are going to go down here, and in that case, that's where it's time to just start throwing stuff at it. Man, I wish I knew back here. Look at that. Even here, it's like, come on, give me a break, guys. Yeah. We're going to have a vaccine. Well, not them, but just us in general as the world. We're going to have vaccines, and it's going to come. Who's going to be involved with that? Well, we're going to need a lot of vials and, disposables. Yeah, so my pick's definitely WST. But I have no problem with the others. It has to be a technical pullback to find something worth buying into. All right. I'll leave it there. Hopefully that's helpful. Again, I'll probably be doing a write-up on WST sometime soon. Mckesson's in our portfolio. I don't have UNH. That's nothing against UNH. They're amazing. I'll probably find a spot where but it's just been, I haven't put it in there just because of how overblown the move's been. And if I'm going to compound, if I'm going to buy, like, let me explain my reasoning behind that real quick so you guys can understand. If I'm going to buy something that is just rip-roaring, it's going to be something like Lilly. Right? Now, why am I doing Lilly? Because although overvalued and profitable, extremely profitable, they have a decent yield, and their safety, growth, consistency. So there's that. And let's go to earnings. I mean, look how this thing is just expected just to keep going. Not sure about that, but these guys, they have so much cash that whenever they need to, just pull a trigger, they'll find something. We need some money. Or we need some revenue. Go buy somebody. Nuts. They have been spending. Actually, let's take a look at Lilly real quick. Eli Lilly. And these guys are just diabetes. All those other companies that don't want diabetes because it costs a lot, these guys are the reason why we're going to basically stop having diabetes. They're gonna whoever wins the NASH, or they'll probably get in on it. I mean, they have everything, but these guys are just, between diabetes, obesity, they're just some of the best. Where's your pipeline? That's probably, you know what? I gotta go investors. Hopefully they still have a these bigger guys sometimes don't have slide decks. Because it'd have to be like, 200 slides long. 2022. Sorry, this is turning into a very long video here. Now that we're adding Lilly into it. Yeah. Trulicity. Look at these guys. Cancer. I mean, some of these guys are just getting started, but psoriasis, I mean, these guys just have everything. And it's some of the top names, like phase 3 initiations. So basically what I'm pointing out here is that we have several a few drugs in here where starting the phase 3. Get it done. These guys could have at least 1 or 2 blockbuster drugs in this phase 3s. I mean, that's... I have to take a deeper look into that one. But, of course, you got these dermatitis, you have psoriasis, all these types of, biologics that they're trying to grow here. Ulcerative colitis. Ulcerative colitis. These guys know what they're doing. I haven't done too much work on Lilly. It's just been, these guys are just, they always have something that's coming up that could potentially be $1 billion drug. And when they make moves, it's smart. Like, they don't just gobble things up. Now, again, why am I pointing out Lilly? Because they have, again, they have things, they're doing well. They have new things coming on that are growing. Even their long-standing super growth drugs are still growing. Grow. And it's not like, again, it's not going to be crazy comparison to something small. This is a big-time company, so, pulling in an extra $300 million in a quarter, although significant, is not like, a small-time, biopharmaceutical company that's, second year on the market. And, they're going from pulling in $100 million to $400 million in a year. That's obviously a huge situation. Let's take a look at this one more time and then we'll get done. Man, that's just sick. Billions of dollars growth. And there's probably something in here. Like, if these guys, like, you give them a few years, they're pulling away cash, they're putting cash away, and they're stashing it up. And they're like, oh, we're seeing a little bit of slower growth, somewhere in 2020. They'll go find something. They'll buy it up. It might take them 5 to 10 years to pay it off, but they're going to buy that infusion of cash if they need to. They'll find somebody who's doing something. Anyway, I'll end it there. So, I hope that was helpful. I know there's a little bit of a rant in there. But, that being said, all 3 of them great companies. All 3 of them solid dividends. And I don't see, nothing crazy. Nothing that's going to, massive yield. But, it's there. Some of these guys don't have amazing growth in comparison to the industry or the sector. That's okay because they're huge, and them pulling in an extra $250 million, although very important to the balance sheet, is not going to show that they're doing triple-digit growth. So they're not going to get that compared to the rest of the sector, which is mostly smaller guys, right? So who are experiencing crazy growth. All right. I think the only thing I got to do on my end is maybe update some numbers for West, and then I'll add Mckesson, United Health into the healthy dividends. It's probably just worth having in there. I know a couple of you guys have reached out about it, and I'll put it in there for us. and I have no problem with that. It's just finding numbers and a technical spot to actually start putting in some numbers for you guys to follow. I'll work on that today. All right. I hope that was helpful. Till next time.